This is Market Day Report. USDA out with the weekly export sales report this morning. Somewhat bearish, if you will, or at least disappointing. Is it moving the markets? Let's find out. Let's go to Chicago. That's where we find Ted Seifried. Ted is with Zaner Ag Hedge. Good morning, Ted.
How are you today?
Well, a little disappointing when we look at those numbers for the export sales.
Yeah, I guess so. Wheat, there was a cancellation in old crop. It's that time of year. It's really just switching into new crop. The new crop sales for wheat were okay, a little bit better than expected. When you combine it all, it came within the range. In fact, I think everything came within the range. But there are very big range of guesses, and a lot of it, soybeans in particular, came in at the low range of guesses. And here's the thing about that, Tony. If you look at soybeans throughout the whole, tariff thing, the last 2 weeks, basically, soybeans have been relatively strong. And a lot of people scratching their heads on that, saying, well, we're in a major tariff war with the largest soybean buyer in the world. How come soybeans are relatively strong? It's really the front month soybeans. And it's because of the amount of pressure that's come on to the US dollar index, really pushing that lower, making the currency comparison or currency advantage to us over South America, making us a little bit more competitive on the global market at a time where we'd usually be watching our export sales fall to nothing. And so, you look at the board even today, July corn up penny and 3/4, while November's down 2 cents. That's showing that there's strength in the front. That's showing that there could be some interest in exports. It wouldn't be from the crush margin because crush margins have actually been under pressure for the last week or so. So that's great and all, except for we don't see it happening on the weekly export sales. At a 277,000 metric ton weekly export sales number, that is really tailing off and acting like it's our normal sort of end of season or closing of the window of opportunity for our export program. And so, we keep waiting to see if we're going to get some daily flash sales or something happening there, and it doesn't happen. So now I'm really wondering why we have the old crop soybeans strong versus new crop, why we're bull spreading right now. The relative weakness in the dollar was a good answer for that, but we got to see the sales behind them. And I haven't seen that yet, Tony. So I wonder how long this can last. That's really kind of my message here.
Yeah, you're spot on there. And again, pretty disappointing when we look at the numbers. I did find one number, though, that was somewhat encouraging. Sorghum up 86% week over week and a 32% increase in sales over the 4-week average. Let's take a quick break. We'll come back in a moment. We'll look at livestock futures with Ted. Market Day Report continues in a moment. So we've been focusing on that cash cattle market, which just continues to get stronger, and already Kansas moving some cattle this week yesterday, and it's $3 higher than the previous week. Live cattle futures right now in the red, though. That April contract is off 22 at 212.47, will expire next week. June at 207.20 is down 90. Over to the feeders, and we're seeing lower trade there, with the May down a dime at 288 1/4. And then the hog trade, hogs have been higher 9 out of the last 10 sessions, and the June contract is 90 lower this morning, 99.25, after June and July both pushed above $100 yesterday. What do we make of it? Ted Seifried's with Zaner Ag Hedge. Ted, what are you seeing?
All right, Tony. So maybe not quite time to hit the panic button quite yet, but it is a little bit disconcerting that we're not following through on yesterday's contract high in the June live cattle. We had gotten fairly overbought, but we only got to about 66% on the relative strength index. There was room to go. And when you look at the equities markets finding more strength and finding follow through from the last 2 days' strength, you think, hey, we should be maybe following, and cash was stronger. And there's kind of a lot of reasons why cattle maybe should be higher on the day. Now, it's an inside trading day. We're not down a whole lot. It is pretty quiet. So for the moment, I'm going to say this is just the cattle complex taking a bit of a breather. But if we put together a few days like this, we're going to start looking very triple toppy in both live cattle and feeder cattle contracts, and that could be a bit of a concern. So Again, kind of a quieter day. It's an inside trading day, not a big deal, but do kind of keep a side eye on this thing because we are at very high prices. And if we are in fact going to get more concerned or about how we spend our money, if we are in fact going to get more frugal, I suppose, at the butcher's counter, well, you could argue that this is a good place to be topping out prices. So do keep an eye on it. Hogs, there we are really just correcting the relative strength index, although we had really poor export sales. That means something for hogs, and it does reflect how, well, lack of China business is affecting our exports.
All right, before we go quickly, thoughts on the energy markets and West Texas Intermediate moving higher, 62.65.
A little bit higher there. I'd almost say with the stock market quite a bit higher in the big 3-day gains that we've had these last three days, crude should be doing better, maybe getting into the mid to upper 60s, but it really hasn't. I think that's a reflection of just, hey, we're not sure about this bounce in the stock market. We're not sure that everything's fixed in the economy from a domestic and global standpoint. It's a bounce. It's nice to see, but I don't know. I think it could have been better.